Hey veterans, my name is Steve Doherty. I'm the Raleigh VA loan guy. Today I want to talk to you about the APR, or annual percentage rate. Is it something that you need to pay attention to? Is it a negotiated term of the mortgage? Should you pay any attention to it at all? By the end of this video, I will explain what it represents, how to utilize it, and if there might be more important information out there that you should be paying closer attention to. But first, my name is Steve Doherty. Again, I'm the Raleigh VA loan guy. I'm a loan officer in Raleigh, North Carolina, and a United States Marine Corps veteran. If you would like me to talk to you about getting pre-approved for a mortgage or checking your loan estimate to look at that APR, I will leave my contact information in a pinned comment below and in the video description. I am licensed to do mortgages in South Carolina, North Carolina, and Virginia. If you live anywhere else than that and just want to pick my brain, still, please feel free to reach out. Okay, so first, the APR is not a negotiated term of your mortgage loan, right? It's not like a certain fee or points or the actual interest rate. The APR is more or less a consolidated expression of the interest rate plus the costs that you pay on your mortgage loan, and then it's expressed as an annual rate, the annual percentage rate. Again, it is not a negotiated term. You don't lock in an APR. You couldn't tell a loan officer to get you this APR. Other data, other levers that a loan officer or a mortgage bank can pull with regards to the mortgage that they're preparing for you, those in turn impact the APR. While it is not the same as the interest rate heavily influences the APR. And the APR should be fairly close to what the actual locked interest rate will be. So let's take a quick look at some examples of how the costs on a mortgage loan will alter that APR. Okay, in both examples, we have a VA borrower buying a $500,000 home. He is doing 100% financing, and he is not paying a funding fee. We'll just assume he has a 10% disability rating. So again, on page 1 of this loan estimate, it's showing the loan amount, the corresponding monthly payment, and the actual interest rate, right? The interest rate dictates how much interest you pay over the course of time relative to the loan balance, okay? Now, if we go down to page 2, again, you look at category A, and if you're shopping for a mortgage, this is where you will kind of make or break your decision in category A. These are fees from the bank, right? Directly from the bank. So in this first scenario, we just have a regular $995 fee. This is what my bank charges. It's a little bit below what most banks charge, okay? So we have an interest rate of 5.5% on a $500,000 mortgage. And on page 3, it is showing us the APR of 5.561%. Okay, so in this next scenario, we're going to keep the loan amount the same. We're going to keep the interest rate the same, but this borrower was charged, let's say, 1% in points. So that's going to add $5,000 of fees onto that mortgage. If we flip over to the final page 3 of the loan estimate, where it's showing the loan estimate, we can see that the APR has gone up from 5.561 to 5.653%. Okay, and then going back to this page 2 of the loan estimate, you can see there's a whole bunch of fees, right? Some of these are closing costs, some are prepaids and escrows. Not all of these fees ultimately factor into the APR. So is the APR helpful? Should you be paying attention to it? Well, the APR does not capture anything that is not otherwise represented in the loan estimate. There are no fees that the APR could sort of spot or locate that haven't already been disclosed on this loan estimate. I personally think it's much more helpful to focus on the interest rate as disclosed on page 1 and the individual itemized fees on page 2. Again, not all of these fees even factor into the APR. Most of the fees that do factor into the APR would be in categories A, B, and C. Generally speaking, fees in category A are your lending charges, right? Fees that are directly from the mortgage bank. Sometimes you'll see these as origination charges, origination fees, right? A locking fee, an underwriting fee, a processing fee, and points. These are really the things that are going to be pushing the APR around. The fees in category B, these are third-party fees, typically credit reports, appraisal inspection fees, a flood certificate, verification of employment. Sometimes there's other kind of junk fees that are thrown into category B. Those also impact the APR. Finally, the fees in category C impact the APR as well. This is title insurance, typically the closing attorney's fee for performing any work. There usually aren't many other fees in category C that don't fall under those two larger umbrellas of attorney's fees and title insurance. So there is one more fee over in category F, the prepaid interest, that would also impact your APR. However, that daily interest is simply a function of the day of the month you close, the loan amount, and the interest rate. So you really can't be negotiating that or changing it or really even paying attention to that. There are other factors that dictate that figure. So should you be looking at this APR number? Should you be worrying about it? Well, I think that it is much more helpful and you will have a much better idea of the deal that you're getting if you pay attention to the interest rate on page 1. Also pay attention if it's locked or not. Pay attention to that interest rate on page 1, and then the individual itemized fees on page 2. Again, if you've reviewed all of that, there's nothing in the APR that you haven't already seen. So is the APR a distraction? Should you ignore it? Not necessarily. I think the APR is a good secondary method of evaluating what kind of a deal you're getting. If number one, you really don't understand the fees on page 2, you don't have time to review those individual fees, or maybe the mortgage bank that you're working with isn't taking the time to explain these fees to you. If you just have one option on how to evaluate a mortgage loan that you're being offered, the APR is pretty good because it's capturing everything all at once. It's sort of one snapshot into this mortgage. It's also pretty helpful on a refinance. Typically, mortgage lenders, when they are offering refinances, will quote kind of crazy low interest rates, throw in big fees in that category A, fees that do move the APR around, right? And if you see the APR is much higher than that locked interest rate, maybe that could raise some alarm bells for you that you are overpaying in fees to achieve an interest rate on that refinance. Again, my name is Steve Doherty. I'm the Raleigh VA loan guy. I'm a United States Marine Corps veteran and a loan officer in Raleigh, North Carolina. I'm licensed to do mortgages in South Carolina, North Carolina, and Virginia. If you would like me to help you decipher the APR, please leave a comment below. Send me an email, text message. I look forward to hearing from you.